NIO stock closed today at $6.45, down about 2.7%. It was a moderate red day for the broader market, with tech and growth stocks under pressure, and NIO once again found itself caught up in that same tide. But the real story today isn't that the stock was down, it's that nothing new actually happened to justify the drop. No fresh bad news. No operational stumbles. No new lawsuits. No analyst downgrades. Just another session where the market's tone dictated the movement more than the company's reality. And this is becoming a recurring theme for NIO lately. The company continues to execute quietly, post record deliveries, and expand internationally, while the share price drifts lower on macro sentiment, trader positioning, and Chinese ADR weakness. So in today's after-hours breakdown, we're going to unpack what really went on beneath the surface, what this decline actually means, and how to read between the lines when markets move like this. Let's start with the obvious. Markets were weaker today across the board. The Nasdaq fell, the S&P slipped, and risk appetite was noticeably lower. It wasn't a panic session, but it was cautious, the kind of trading day where investors rotate out of high beta names and into safer, more defensive plays. And that matters because NIO sits in one of the most sentiment-sensitive categories of all, Chinese electric vehicle stocks. These names, like NIO, XPeng, and Li Auto, don't trade purely on fundamentals in the short term. They trade on emotion, momentum, and global risk appetite. And when the market gets cautious, they almost always feel it first. That's exactly what we saw today. NIO opened relatively flat, even showed a bit of green early in the session, but couldn't hold it as the day went on. It drifted lower, not on volume spikes or panic selling, but in a quiet, methodical way that signals a mix of algorithmic rebalancing and trader fatigue. That's not fear, that's just a lack of short-term conviction. And the reality is, when a stock lacks immediate catalysts and the market environment is negative, algorithms and traders will lean towards selling rather than buying. Not because they suddenly lost faith in the company, but because in a weak tape, it's easier to take profits or stay out of the way. That's the mood we saw today. Now here's the interesting thing, nothing about NIO's fundamental story changed today. In fact, the most recent company update remains overwhelmingly positive. The company shipped over 400 vehicles overseas in October, one of its biggest export months ever, signaling that global expansion is finally moving beyond theory and into action. And that's on top of delivering over 40,000 vehicles in October, a record month for the company, representing a 92% year-over-year increase. That level of growth is something most automakers would kill for, but because of the current market mood, it's being treated like background noise. Investors aren't rewarding execution right now, they're waiting for profitability. And until that inflection point arrives, the market treats NIO like a show-me stock, which means even good news doesn't always translate into price action immediately. It's also worth noting that NIO just announced its date for third quarter earnings, November 25th. That's less than 2 weeks away. So, part of today's move might also be traders simply lightening exposure ahead of that report. When a stock has been volatile and earnings are around the corner, it's common for short-term players to step aside, especially if the broader market is soft. It's not bearish, it's precautionary. From a technical standpoint, NIO is still hovering in the mid-$6 range that's been acting as both support and resistance over the last few weeks. The stock keeps testing that area, bouncing, and fading again, and that's exactly what we saw today. Once it slipped below 650 intraday, stop-loss triggers likely added to the downward pressure. Algorithms trade these levels automatically, they don't care about fundamentals or delivery growth. Once a level breaks, they execute. So when you combine a weak overall market, cautious risk appetite, technical selling, and no fresh catalysts, you get exactly the kind of day we saw today. Modest decline, low energy, no major shift in narrative. But here's the real question, what does this mean for investors going forward? First, it means that short-term volatility remains the norm. The market is in a holding pattern, not just for NIO but for a lot of growth stocks. Everyone's waiting for direction. The next real inflection point for NIO will be earnings on November 25th. That's when investors will get to see whether the delivery growth is starting to flow through to the financials, margins, cash flow, operating expenses, and the path toward break-even. Those metrics are what will drive sentiment heading into 2026. Second, it means that for long-term investors, this kind of weakness can actually be an opportunity. Because if a company continues to deliver record numbers, expand globally, and ramp production while the stock drifts lower due to temporary macro sentiment, that's a disconnect. and disconnects eventually correct. The only question is when. If NIO continues to perform operationally, and the market eventually rotates back toward risk assets, the stock could be positioned for a sharper re-rating. Third, today's weakness also highlights the role of Chinese ADR sentiment. Every time tensions rise, whether it's over trade, regulation, or macro policy, these stocks take a hit. And yet, time and again, those moments pass, and the long-term trajectory resumes. That doesn't mean it's easy to hold through it, but it's important to recognize that NIO isn't being singled out. XPeng, Li Auto, Alibaba, JD.com, all of them face the same macro drag. Now, in terms of the narrative for your video, this sets up a really strong after-hours angle. You can frame it around the idea that NIO's decline today isn't a reflection of anything wrong at the company, it's a reflection of market fatigue. The headline could be something like, NIO falls 2.7%, market noise, not a warning sign. That captures both the reality of the drop and the calm, measured tone your audience appreciates. In your delivery, you could highlight that this was a market day, not a NIO day. A session where sentiment and technicals ruled the tape. You could point out that the fundamentals are not only intact but improving. Shipments up, deliveries at record highs, production ramping, these are not the markers of a weak company. They're the markers of one that's executing through noise. From there, pivot into what matters next, the catalysts that can reframe sentiment. The upcoming earnings report on November 25th. The November delivery update. Any commentary around export volumes or the Firefly brand in Europe. These are all potential triggers that can reset the conversation from short-term drift to long-term momentum. You can also emphasize that today's move doesn't change the bigger picture. Yes, the stock is down. Yes, sentiment remains cautious. But in the context of NIO's year, this is just another step in a longer recovery arc. The company has spent most of 2025 stabilizing operations, ramping production, and expanding its brand portfolio. These are foundational moves that don't always show up in the price right away. But when they do, they tend to show up suddenly, because the market finally wakes up to progress that's already been happening quietly. As always, you can close your video by speaking directly to both types of viewers, traders and investors. For traders, remind them that NIO remains range-bound, with 650 acting as short-term support and $7 as resistance. For investors, remind them that the fundamentals are stronger now than they were 6 months ago, and the market's indifference doesn't erase that progress. The takeaway tonight is simple: NIO's drop was part of the market, not apart from it. And that distinction matters. Because when the next rotation comes, whether it's sparked by earnings, policy shifts, or sentiment turning in favor of EVs again, the companies that kept executing through the noise will be the first ones to benefit. If you found this breakdown helpful, make sure to like the video, subscribe for more NIO and EV stock analysis, and comment below. Do you think NIO's steady expansion will eventually pay off in the stock price, or do you think the market is still too cautious to care? I'll see you in the next one.